As a business owner, you have probably asked yourself the following questions like, am I putting enough away for myself? Am I paying too much in taxes? Or am I exposed to a lawsuit that I don't know about? That's normal. As a business owner, you are an expert at running your business, but not necessarily all of the things that come along with running a business. That's why today we are going to go over a case study of a blue-collar business owner just like you who is facing some serious risks and what we did to help him resolve those risks. So, meet Mike. Mike is a 53-year-old HVAC business owner in Utah. He's been doing this about 18 years and he's done really well for himself. He's grown this business to about $2.4 million a year top line, and he's taken home a salary of $200,000 with a total net income after that of $430,000. Now, Mike's starting to get to the point where he's thinking he may want to retire, and he's starting to ask himself some questions about how do I use this asset to retire instead of just giving it up when it's time. So, what are the problems that Mike is facing? As every business owner knows, he feels like he's paying a little too much in taxes. So, Mike wants to make sure that he's not leaving money on the table and that his tax situation is adequate and compliant, but that he's only paying his exact fair share. The next thing Mike is concerned about is liability. He wants to make sure that he's protected in the event of a liability risk because he's got employees, he's got people driving, he's got people working and employees working in people's homes. So he wants to make sure that he is adequately covered for the exposure that he has. The next thing is Mike feels behind in his retirement planning. He's built a wonderful business that's doing a great job, but he wants to know how he can use that business to make sure that his retirement is secured and that he stops feeling behind. So we're going to help him put a plan in place to make sure that his retirement goals are funded and he can pull the trigger when the time is right. The last thing is kind of tied to the retirement section is an exit plan. Mike has built this wonderful business, but what's he going to do with it when he doesn't want to run it anymore? Essentially, how is this business going to outlive Mike and be something that he can kind of leave behind as a legacy, maybe use for retirement income, or go to the people that he wants it to go to? And we'll discuss that in a minute. But before we do anything, we assemble our team. We get the information from Mike, and we get our team of an attorney, a CPA, an insurance agent, and a financial advisor together to meet on Mike's behalf so that we build a plan that works together instead of inadvertently working against each other. What we found in the past is if an individual's professionals aren't working together, their planning could actually be taking the client in two separate directions. So by getting everyone in the same room, we make sure that the planning is cohesive and we come out with some really, really great results. So we're going to go through each of Mike's problems, what he was facing, the solution, and the result for what he was facing. So let's start with the number one problem that most small business owners are facing: taxes. Mike ran all of his personal and business transactions through the same account, which made it really difficult to maximize deductions, track profitability, or maintain an audit-ready record in case the IRS comes knocking. Mike was also operating as a sole proprietor, which means that he was paying taxes on 100% of his profits. He had to pay self-employment tax on 100% of his profits, which is a huge tax burden that he didn't need to be facing with a little bit of creative structuring. Without a retirement plan or tax deferral strategies, all of the earnings that his company was making were taxed in 1 year. So there was no deferral strategy. We weren't able to stretch that taxation over multiple years or defer it down the road to when his income is lower. So he was paying it all right now, which is actually a pretty big tax hit to Mike as a business owner. So what did we do to help him? We separated his personal and his business accounts. We implemented some bookkeeping best practices, and we recommended that he hire a bookkeeper to help maintain and keep things audit ready and also just clear so that as a business owner, he can look back retroactively and have the data he needs to make informed decisions. We also restructured so that he's filing his taxes as an S-Corp, which gives him some tax efficiency, allowing him to set himself a reasonable salary based on IRS and comparable guidelines to a lower salary, and then he takes the remaining profits as a distribution, which are not subject to that self-employment tax, which saves him some taxes in the long run. We also established a safe harbor 401k plan with a profit sharing component, which allows him to take some of those profits and that payment that he was making and put them into a qualified retirement plan and defer some of that taxation until later when he's in a lower tax bracket, and we can do some tax planning then to further reduce the taxes. When tax planning, it's all about minimizing the lifetime tax bill for your situation. There's a lot of people that do everything they can to reduce taxes just this year, but the problem is that means you're kicking a lot of taxation down the road in retirement and things like that. So one way or another, you're going to have to pay the taxes, but it's structuring it in a way that makes sense for you and reduces the lifetime taxation bill that you face. After implementing these changes, Mike has more accurate books, which helps him stay IRS compliant. He's saving about $35,000 to $40,000 a year in taxes, and he's moving over $100,000 a year into retirement accounts, which will help set him up better for retirement. We'll talk about in a moment. The next area we covered with Mike was a review of the liability he faces as a business owner, which is a real concern for many business owners. Mike owned all of the equipment and the trucks in the business personally. They were titled in his name, which puts him and his personal assets at risk in the event of a lawsuit. His insurance coverage was inconsistent and left potential gaps in protection, and he had no personal estate plan, meaning that a lot of his assets could be tied up in probate and vulnerable to creditors in the event of an untimely death or something like that. So what's the solution? We took the titles from the equipment that were previously titled in Mike's name, and we transferred them to an LLC in the company's name and insured them properly with a property and casualty agent that has experience insuring fleet vehicles just like Mike's. We also completed a personal insurance review. We improved coverages and made sure that the coverages he had on his home, his life insurance, and his cars were adequate for his needs to make sure that there's no additional liability being taken on there. We added a $5 million umbrella policy on Mike so that in the event of a liability incident, he has an additional backstop to help protect him from a catastrophic loss in the event of something occurring in his business. The last thing we did is we implemented an employee driving policy and an employee handbook across his business to standardize procedures and reduce potential risks that his employees face by making sure that his employees are following protocols that are safe and don't add any additional liability to the way that they operate. So, as a result, both personally and his business, he's facing less overall exposure by increasing coverages and making sure that the plan he has in place is adequate for the risk he faces. We also reduced employee risk by implementing standard operating procedures that keep his employees compliant and implementing regular procedure audits to make sure that his employees are following these procedures and not adding any additional liability on to Mike. The next problem Mike was facing was, how do I make this business work for me as long as I've worked for it? How do I retire off this thing? Because Mike had no clear retirement target or a projection of what was even needed to retire, he had a lack of strategy, which caused his investment strategies and his current investments to be misaligned and work inefficiently. Starting this late also meant that his retirement savings were not as adequate as they needed to be, causing him to have to play a little bit of catch up, which is okay. So what's the solution for these problems? We ran some retirement projections and had some serious conversations with Mike and his wife about what they wanted life to look like in retirement, so we knew what to plan for. We created an integrated plan that linked not only his tax strategy, but his business exit strategy together so that we can coordinate a plan that works for Mike instead of the other way around. We used his retirement accounts, including the 401k we set up, as well as some non-qualified brokerage accounts to increase contributions to meet funding goals that Mike will need to live the life he wants to in retirement. So as a result, Mike had a quantifiable target for retirement and a plan to reach it, not only from an investment standpoint, but from a tax and a business standpoint as well. We were able to reduce the age that Mike is going to retire by 5 years with an increased contribution rate through the qualified retirement plan we implemented earlier. That's pretty good. Problem number 4 Mike is facing is an exit plan. As a business owner, he had no clear plan for valuing or preparing his business for sale, which is a big issue that business owners run into. You spent 20 years of your life building this business and it served you very well, but how do you get out of it and how do you make sure you're getting the most value out of it possible? He also had no clear successor, which means that if Mike had to step away or died unexpectedly, the business might collapse because there's no clear procedure for what's to happen if Mike's not there. So as a solution to make sure that Mike gets out what he put in or more, we worked with a business valuation expert to make sure that Mike has an actual number tied to the value of his business instead of just a mental guesstimation. We also implemented a buy-sell agreement between Mike and his foreman to ensure that there's business continuity in case Mike passes away unexpectedly. This is an agreement that's funded with life insurance to provide the business with liquidity in case that Mike passes away. The business is able to pay out his heirs. We implemented emergency standard operating procedures and a contingency emergency plan in case something like that happens to Mike so that the business can continue to operate even if he's not there. We also established a personal estate plan for Mike, which included a revocable living trust that was tied with his business interests to make sure that there's continuity of his ownership to his heirs. As a result, his business is now positioned for a higher multiple and a smoother sale because of the organization and knowledge that he carries about the value of his business. The continuity and client retention are safeguarded because there's a plan in place to take care of things in the event of a key person interruption. This means that Mike's business can continue to operate even without him because of the standard operating procedures we've put in place. This gives Mike the ability to step away and sell the business when needed as a unit separate from the value he provides to the business. So that was a very, very high-level overview of the things we did to help a blue-collar business owner ensure his retirement and protect the thing he's worked hardest for. If this is interesting to you, we have a guide on our website, wheelhousewealthmanagement.com, that goes over 5 of the biggest money mistakes that you could be making as a business owner that could be costing you thousands of dollars in retirement. If that's interesting, click the link below and we'll see you in the next video.